Hello and welcome to the Technofunda Investing video series. This is a new series known as Financial Statement Analysis video series, and this is a second session in this series known as Understanding Income Statement. The first session was on understanding balance sheet. If you have not already seen the video, you can click the link below this video and first see the first session before you start understanding the income statement module. So today's agenda consists of 4 key items. First, we will try to understand what is income statement. Then we will try to understand what are the key components of income statement. And then with the examples, we will try to see what are the components and how they tie up with each other. And lastly, we will understand what does an income statement signify. So let's get started. What is income statement? Income statement in very basic parlance is something which is coming in the business or in any person's life, and something which is going out. And obviously this money coming in and money going out is obviously for a period of time. It could be one day, it could be 1 week or 1 month or a year. So let's dig deeper. And we already understood the first part, that is something which is coming in, which is known as revenue, or we also tell that as a top line. Then there is some money which is going out, and these are your expenses, and whatever is remaining, which is the net amount, is known as income. So let's take an example of a super pizza. So we have this excellent chef who is preparing the pizza for their customers, and let's assume the selling price of one pizza is $100, and whatever raw material, the vegetables and the pizza base which is required, is costing $20. Now assume that we are preparing this income statement for 1 week, just for our understanding, and we assume that super pizza is selling 10 pizza during the 1 week duration. That means if one pizza was costing 100, now the revenue will be 1000 because they are now selling 10 pizza. Now in terms of expenses, as we already knew that one pizza costed $20 for vegetables and pizza base, hence 10 pizza will cost 200. Then you have a salary of the chef, which is again $200, and then you also use oven to prepare that pizza, which will have wear and tear, which is normally known as depreciation, and we will try to understand depreciation later in some part of other video series. The depreciation is $100. So in all there are 3 expenses currently: the cost of raw materials or cost of goods which we sold, which is vegetables and pizza, which is 200, your salary and similar expenses for the chef, which is $200, and then there was a depreciation or wear and tear of your oven or your machinery, which is 100. So we are left with $500 as our income. But here's the thing, now there is one more additional expense, which is the government, right? So government takes taxes from each businesses and each citizens. So here, assuming the tax component is 20%, so 20% of 500 is 100, which is the tax outgo to the tax department, and we are left with profit or the income after tax of 400. So let's come to the summary. Income statement always signifies how much money do I make in a certain time period. As I said, it could be a day, it could be a week, it could be a month, or it could be a year. Very basic terms, it is revenue or money coming in minus expenses or money going out, which gives us net income or the net amount of money. And we also understood with the examples, we had a customer who gave the revenue of $1000, then there were expenses of raw material, the chef's salary, and then depreciation of the oven, and then finally we had also a tax department whom we need to give the money, and that is what resulted us with the after tax income. So always remember, income statements signifies how much money do I make in a certain time period. Thanks for watching. Do share and subscribe the video channel.